Hello friends, I C.A. Kamakshi Khandelwal welcome you all to my next session in my webinar series on GST. My topic for today's deliberation is valuation. Why valuation is important? Valuation is important to determine the value on which I am liable to pay tax in GST once it is determined that my activity is a supply and I am liable to discharge the tax liability. So let's start. Section 15 of the CGST Act 2017 deals with the value of taxable supply. It says the value of supply of goods or services or both shall be the transaction value, which is the price actually paid or payable in relation to the said supply of goods or services or both, where the supplier and the recipient of the supply are not related and the price is the sole consideration. So, the twin conditions for accepting the value agreed between the supplier and the recipient is first, the supplier and the recipient should not be related, and second, the price is the sole consideration. Now, what is the meaning of consideration? According to Section 2, Clause 31 of the CGST Act 2017, consideration in relation to the supply of goods or services includes any payment made or to be made, means both advance as well as the future payment is considered, whether in money or otherwise, means consideration can be in cash as well as in kind, in respect of, in response to, or for the inducement of the supply of goods or services or both, whether by the recipient or by any other person, but shall not include any subsidy given by the central government or the state government. B. The monetary value of any act or forbearance in respect of, in response to, or for the inducement of the supply of goods or services or both, whether by the recipient or by any other person, but shall not include any subsidy given by the central government or the state government, provided that a deposit given in respect of the supply of goods or services or both shall not be included in the payment made for such supply unless the supplier applies such deposit as the consideration for that supply. So, where price is the sole consideration, the value agreed between the supplier and the recipient shall be the transaction value. But in case price is not the sole consideration, for example, a new washing machine is sold for Rs 25,000 in exchange for an old washing machine, then in such a scenario, the transaction value will not be accepted and we need to refer to the valuation rules. Now, there is one more condition which says that the supplier and the recipient should not be related. Who are the related persons in GST? Let us understand. According to explanation A to Section 15 of the CGST Act, persons shall be deemed to be related persons if such persons are officers or directors of one another's businesses, such persons are legally recognized partners in business, such persons are employer and employee, any person directly or indirectly owns, controls or holds 25% or more of the outstanding voting stock or shares or both of them. One of them directly or indirectly controls the other. Both of them are directly or indirectly controlled by a third person. Together they directly or indirectly control a third person, or they are members of the same family. Let us take up an example. Tata Steel and Tata Motors are two separate legal entities under one control, which is Tata Sons. Although the former supplies inputs to the latter, such business entities which may have a separate legal existence but falling under the common control falls under the definition of related persons in GST. Now, Coming over to the next subsection, that is section 15 subsection 2, inclusions to be made in the transaction value. There are 5 things to be included in the transaction value. First, any taxes, duties, cess, fee and charges levied under any other law other than the GST Act and charged separately by the supplier. For example, if ITC sells cigarettes containing tobacco, then excise as well as GST will be levied. So, while calculating the value for GST, the excise duty should be included in the transaction value. Second, any amount that the supplier is liable to pay in relation to such supply but has been paid by the recipient and not included in the price charged by the supplier. For example, Maruti Suzuki appointed me a chartered accountant for conducting an internal audit for a lump sum fee of rupees 1 lakh, including the travelling, boarding, lodging expenses, etc. Now, I had to visit the Maruti plant for conducting the same. Maruti Suzuki bear the charges of rupees 5,000 for me. So, in this case, recipient of service, that is Maruti Suzuki, paid the amount of cab charges which is liable to be paid by me, the supplier. So in this case, GST is leviable on 1 lakh plus 5,000, totaling to 1 lakh 5,000. Next point, incidental expenses, including commission and packing charged by the supplier to the recipient of supply and any amount charged for anything done by the supplier either at the time of or before the delivery of goods or supply of services. For example, X buys a mobile for a price of rupees 15,000. Further, X pays rupees 150 for a 24-hour quick delivery and rupees 100 for gift packing. So what is the transaction value for the supply of mobile? The amount charged towards quick delivery and gift packing will be added to the transaction value. Therefore, the value of the supply of mobile will be rupees 15,250. Next point, interest or late fee or penalty for delayed payment of consideration. For example, A Limited buys goods from B Limited for a price of rupees 1 lakh. The contract provides for a 60 days credit and an interest of 12% per annum for any delay in payment. A Limited pays after 90 days. Then what is the transaction value for the supply of such goods? Section 15 subsection 2 clause D states that any interest or the late fee or penalty for the delayed payment of consideration is to be added to the transaction value. Hence, the interest for the delay of 30 days, that is rupees 1,000, would have to be added to the transaction value and GST on it shall be paid, provided such interest amount is actually paid to the supplier of the goods. Then only GST shall be leviable on the interest amount. Next point, subsidies directly linked to the price, excluding subsidies provided by the central government or the state government. Let us take up an example. ABC Water, an NGO for providing clean drinking water in rural India, sets up water purifying facilities at various panchayats in Maharashtra. It supplies purified drinking water to consumers at 5 rupees for a 50-litre can. It supplies at this price as it gets electricity at a subsidized price from a private distribution company at rupees 1.50 per unit as against a normal tariff of 3 per unit. Then what is the transaction value of the supply of water if the subsidy in terms of cost reduction is 0.50 per can? The subsidy of rupees 1.50 is directly linked to the supply and hence will be added to the transaction value. Therefore, the value of the supply will be rupees 5.50 per 50-litre can. I hope I am clear to all of you. Next, coming over to the next subsection, section 15 subsection 3, Exclusions from the transaction value. The value of supply shall not include any discount given before or at the time of supply, provided such discount is duly recorded in the invoice, and any discount given after the supply, provided such discount is in terms of the agreement at or before the time of supply and is specifically linked to the relevant invoices, and the recipient has reversed the input tax credit attributable to the discount. For example, A Limited, a consumer goods manufacturer, offers various discounts to its dealers like cash discount, quantitative discount, seasonal discount, special annual discounts, etc. Cash and seasonal discounts are given before the supply and are recorded on the invoice. Quantitative discounts are given after the supply and are based on targets and are adjusted by the way of credit note once the target is met. The credit note reflects the lump sum discount value. Special annual discounts are given after the year end to the best dealer of the region by way of a cash award. So are these discounts deductible from the transaction value? Let's see. Cash and seasonal discounts given before the supply and recorded on the face of the invoice are deductible from the transaction value, and the quantitative discounts, seasonal annual, special annual discount given after the supply are not linked to the relevant invoices. A mere lump sum amount is recorded on the face of the credit note or a payment in cash is made. Hence, the quantitative discount and special annual discount will not be reduced from the transaction value. So, if any discount is specifically linked to the relevant invoices, then only it will be reduced from the transaction value. Now, section 15 subsection 4, it says where the value of supply of goods or services or both cannot be determined under subsection 1, the same shall be determined in such manner as may be prescribed. Now, what can be the cases where the value cannot be determined? It can be where the supplier and the recipient are related, or the price is not the sole consideration, or stock transfers, or barter, etc. So for these, we need to refer to the valuation rules. So rule number 1, value of supply of goods or services or both where the consideration is not wholly in money. It will cover cases like the barters, exchange, etc. The value shall be open market value. If the open market value is not available, the value of supply shall be the sum total of consideration in money and money equivalent of any further consideration known at the time of supply. C. If it is not determinable under A or B, then the value of supply shall be the value of supply of goods or services or both of like kind or quality. D. It says where the value is not determinable under clause A, B or C, then the value of supply shall be the sum total of consideration in money and money equivalent of any further consideration as determined by the application of Rule 4 or Rule 5 in that order. So, let us understand what is the open market value. According to explanation to Rule 9, open market value is full value in money excluding GST payable by a person in a transaction of such similar supply being made at the same time where the supplier and the recipient are not related and the price is the sole consideration. And what is the supply of goods or services of like kind and quality? It is any other supply of goods or services or both made under similar circumstances and is same or closely or substantially resembles in respect of characteristics, quality, quantity, functional components, materials and reputation. So now let us take up an example to understand this provision. A, an individual buys a car from a dealer B for rupees 10 lakh along with the exchange of his old car. The value of the old car as agreed between both the parties is rupees 1.5 lakh. Now on what value will Y charge GST? In terms of Rule 1, GST will be levied on the sum total consideration of money and money equivalent of goods exchanged, since the open market value is not available. Hence, Y will levy GST on 11.5 lakh. Now, if the open market value of the new car is say rupees 12 lakh, on what value GST will be levied? So, if the open market value of the car is rupees 12 lakh, in terms of Rule 1, the dealer Y would charge GST on the open market value, that is 12 lakh. This is despite the sum total consideration of money and money equivalent of old car is 11.5 lakh. GST would be charged on 12 lakh only. Let's take up another example. X buys from Y furniture for rupees 50,000 along with the exchange of old furniture for rupees 15,000. Y has sold furniture of like kind and quality at the same time to Z for rupees 70,000. On what value will Y levy GST? The open market value of the furniture is not known. However, there is a total consideration of rupees 65,000 for this transaction, in money 50,000 and money equivalent of other form of consideration, that is exchange of old furniture for rupees 15,000. The value of like kind and quality would only be considered when the open market value is not available or the sum total of consideration of money and money equivalent are not known. Hence, here Y will charge GST on 65,000 and not on 70,000. I hope it is clear. Let's take up another example. Facts are the same as in illustration 2, except there is no agreed price for the exchange of old furniture. So what will be the value on which Y will charge GST? Where either the open market value or the sum total of consideration is not determinable, then the value of goods of like kind and quality would be the substantiate value for charging GST. Hence, Y will charge GST on 70,000. Second, if Y is sold to Z few months back, will there be any change in the value on which GST will be levied? Now, whether the price of similar goods few months back can be the substitute price of goods of like kind and quality for a transaction currently undertaken is a question of fact finding. If such price meets the parameters laid down in explanation to Rule 9, that is the meaning of supply of goods or services of like kind and quality, then GST will be levied on 70,000. Else, GST will be levied on a value that is 110% of the cost of manufacture of the furniture. Now, coming over to the next rule, Rule 2. Value of supply of goods or services or both between distinct or related persons other than through an agent. The value of supply shall be the open market value. If the open market value is not available, value of supply of like kind and quality, where the value is not determinable under A and B above, the value of supply shall be as determined by the application of Rule 4 or 5 in that order. Rule 4 is the cost method and Rule 5 is the residual method. Provided that where the goods are intended for further supply as such by the recipient, the value shall, at the option of the supplier, be an amount equivalent to 90% of the price charged for the supply of goods of like kind and quality by the recipient to his customer not being a related person. It is further provided that where the recipient is eligible for full input tax credit, the value declared in the invoice shall be deemed to be the open market value. Let's take up an example. A Limited and B Limited are related persons. A Limited supplies raw material X to B Limited. A Limited supplied 100 kilograms of X to B in October for 800 per kilogram. The following transactions of sale of X are undertaken by A Limited in October. Supply of 100 kgs to another related party C for rupees 850 per kilogram. Supply of 500 kgs to an unrelated party for rupees 800 per kilogram. On what value A Limited will charge GST, assuming that B Limited is not entitled to input tax credit? A supply to a related party cannot be considered as an open market value, and hence the value of supply to C cannot be considered as a value for levying GST. Similarly, a supply of different quantity 500 kgs cannot be considered as a supply of goods of like kind and quality. In our example, it is 100 kgs. So the only option left for A Limited is to resort to the cost based valuation method under rule 4. Now, assuming that B Limited can take full input tax credit for supply of X, then on what value will A Limited charge GST? The second proviso to rule 2 states that where the recipient is eligible for full input tax credit, then the value declared in the invoice shall be deemed to be the open market value. Hence, A Limited can charge GST on supply value of 800 per kilogram and need not resort to rule 4. Now, let's take up another example for the supply of services between related persons or distinct persons. For example, A Limited is an automobile manufacturer and has 5 manufacturing plants across India in different states. The corporate office in Mumbai houses all the senior management and strategic team. The overall payroll and administration cost incurred by the corporate office is rupees 10 lakh per month. How would the value of supply of service by the corporate office to the plants being distinct person will be determined under GST? There is no open market value or the value of supply of like kind and quality. So A Limited has to determine the value on cost basis, that is 110% of the cost of rendering such services. Using a reasonable base and fair allocation methodology, such value should be apportioned to all the plants. Second case, can corporate office charge to each plant a fixed amount of rupees 2 lakh per month? A fixed charge of 2 lakh is a value declared in an invoice, and hence applying the proviso to rule 2, A Limited can charge GST on 2 lakh. Now, coming over to the next rule, rule 3, value of supply of goods made or received through an agent. The value shall be the open market value or at the option of the supplier be 90% of the price charged for the supply of goods of like kind and quality by the recipient to his customer, not being a related person, where the goods are intended for further supply by the said recipient. B, where the value of supply is not determinable under clause A, the same shall be determined by application of rule 4, cost method, or rule 5, residual method in that order. For example, let's assume that the principal Mr. X supplies groundnuts to his agent. The agent Mr. Y supplies groundnuts of like kind and quality in subsequent supplies at a price of rupees 5,000 per quintal on the day of supply. Another independent supplier, Mr. Z, is supplying groundnuts of like kind and quality to the said agent at the price of 4,550 per quintal. Now, what shall be the value at which Mr. X is liable to pay GST? The value of supply made by the principal Mr. X shall be 4,550 per quintal, that is the open market value of the groundnuts, or where he exercises the option, the value shall be 90% of 5,000, that is 4500 per quintal. Now rule 4, value of supply of goods or services or both based on cost. Where the value is not determinable, under rule 1, 2 or 3, the value of supply shall be 110% of the cost of production or manufacture, or the cost of acquisition of such goods, or cost of provision of such services. There is no clarity as to what will be considered as cost and whether a CAS 4 based valuation needs to be adopted or not. Let's take up an example. ABC Limited is a manufacturing office, chairs, and the cost of manufacturing is 4,000 per chair. Similar chair in the open market is valued at 4,500. These chairs are supplied to a furniture showroom at the rate of 3,000 and the balance in non-monetary consideration. What is the value at which ABC Limited is liable to charge GST? Now, since the open market value is available, 4,500 will be considered for the valuation of supply. However, in case if the open market value is not available, the value of supply as per cost method will be followed, which says it has to be 110% of the cost of manufacturing. That is 4,000 into 110%, that comes out to 4,400. Thus, GST will be charged on 4,400 in this case. Now, next rule is the determination of value in respect of certain specified businesses. First is rule 6 sub rule 2, value of supply of services in relation to purchase or sale of foreign currency including money changing. Case A, for a currency when exchanged from or to Indian rupees INR, the value shall be equal to difference in the buying rate or the selling rate as the case may be, and the Reserve Bank of India reference rate for that currency at that time multiplied by the total units of currency, provided that in case where the RBI reference rate is not available, the value shall be 1% of the gross amount of Indian rupee provided or received by the person changing the money. Let's take up an example. Mr. A converted 100 USD into 6500 INR 65 per USD through ABC Travels on 2nd June 2017. RBI's reference rate for buying and selling was 61 or 61.5 respectively on such date. Now, what shall be the value of supply? The value of supply will be 65 minus 61 into 100, that is 400 INR. Thus, the value of supply for the ABC Travel will be INR 400 and GST will be levied on this amount. Second scenario, what will be the value of the supply in case the RBI reference rate is not available? In case where the RBI reference rate for a currency is not available, the value shall be 1% of the gross amount of Indian rupee provided or received by the person changing the money. In above example, if the reference rate is not available, then 1% of 6500 rupees, that is 65, will be the value of supply of service. I hope I am clear to all of you. Next, value of supply of service in case of purchase or sale of foreign currency, case B. It says, provided further that in case where neither of the currencies exchanged is Indian rupee, the value shall be equal to 1% of the lesser of the two amounts the person changing the money would have received by converting any of the two currencies into Indian rupee on that day at the reference rate provided by the RBI. For example, let's assume that USD is converted against Euro. Now, as per the above rule, both these currencies will be converted into INR terms and the value of supply will be 1% of the lesser amount. Next is case C, which says the supplier also has an option to compute the value of supply of service according to the following: 1% of the gross amount of currency exchanged for an amount up to 1 lakh rupee, subject to a minimum of 250 rupee. Second, 1000 rupees and 0.5% of the gross amount of currency exchanged for an amount exceeding 1 lakh rupee and up to 10 lakh rupee, and 5,500 rupees and 1/10% of the gross amount of currency exchanged for an amount exceeding 10 lakh rupees subject to a maximum amount of 60,000 rupees. Now, Rule 6 sub Rule 3, value of supply of service in relation to booking of tickets for travel by air provided by an air travel agent. The value of supply shall be 5% of the basic fare in case of domestic bookings and 10% of the basic fare in case of international bookings. The basic fare means that part of the airfare on which commission is normally paid to the air travel agent. Next is Rule 6 sub Rule 4, value of supply of service in relation to life insurance business. The value of supply shall be the gross premium charged from a policy holder reduced by the amount allocated for investment or savings on the behalf of the policy holder if such amount is intimated to the policy holder at the time of supply of service. B. In case of single premium annuity policies other than A, 10% of single premium charged from the policy holder, or in all other cases 25% of the premium charged from the policy holder in the first year and 12.5% of the premium charged from the policy holder in subsequent years, provided that nothing contained in this sub-rule shall apply where the entire premium paid by the policy holder is only towards the risk cover in life insurance. Let's take up an example. LIC charges 50,000 gross premium from Mr. A, out of which 45,000 is to be invested in funds. Then what will be the value of supply? The value of supply shall be 5,000, that is 50,000 minus 45,000. Coming over to the next sub-rule, Rule 6 sub-Rule 5, value of supply provided by a person dealing in buying and selling of second-hand goods. This section includes buying and selling on online platforms like Quicker and OLX, etc. It says where a taxable supply is provided by a person dealing in buying and selling of second-hand goods, that is used goods as such or after such minor processing which does not change the nature of the goods, and where no input tax credit has been availed on the purchase of such goods, then the value of supply shall be the difference between the selling price and the purchase price, and where the value of supply is negative, it will be ignored. It is also provided that the purchase value of goods repossessed from a defaulting borrower who is not registered for the purpose of recovery of a loan or a debt shall be deemed to be the purchase price of such goods by the defaulting borrower, reduced by 5 percentage points for every quarter or part thereof between the date of purchase and the date of disposal by the person making such repossession. I hope this section is clear. Next, Rule 6 sub Rule 6, value of a token or a voucher or a coupon or a stamp other than postage stamp. The value of a token or a voucher or a coupon or a stamp other than postage stamp which is redeemable against a supply of goods or service or both shall be equal to the money value of the goods or service or both redeemable against such coupon, token, voucher or stamp. For example, if rupees 1500 worth of Sodexo is supplied by the taxable person, the value of supply under GST will also be 1500. Next is Rule 7, value of supply of service in case of pure agent. It says, notwithstanding anything contained in these rules, the expenditure or cost incurred by a supplier as a pure agent of the recipient of the supply shall be excluded from the value of the supply if all the following conditions are satisfied. Namely, first, the supplier acts as a pure agent of the recipient of the supply when he makes payment to the third party on authorization by such recipient. Second, the payment made by the pure agent on behalf of the recipient of the supply has been separately indicated in the invoice issued by the pure agent to the recipient of the service. And third, the supplies procured by the pure agent from the third party as a pure agent of the recipient of the supply are in addition to the services he supplies on his own account. Now the question is, who is a pure agent? According to explanation to Rule 7, pure agent means a person who enters into a contractual agreement with the recipient of the supply to act as his pure agent, to incur expenditure or costs in the course of supply of goods or services, or both. Second, neither intends to hold nor holds any title to the goods or services or both so procured or supplied as a pure agent. Third, does not use his own interest such goods or services procured. Fourth, receives only the actual amount incurred to procure such goods or services in addition to the amount received for supply he provides on his own account. So these are the 4 conditions that are required to be met to qualify as a pure agent. For example, corporate services firm A is engaged to handle the legal work pertaining to incorporation of company B. Other than its service fee, A also recovers from B registration fee and approval fee for the name of the company paid to the registrar of companies. The fee charged by the registrar of the company's registration and approval of the name are compulsorily levied on B. Now, will the charges for registration fee etc. incurred by A be added in the value of service provided by him? No. A is merely acting as a pure agent in the payment of those fees. Therefore, A's recovery of such expenses is a disbursement and not the part of the value of supply made from company A to B. Next is Rule 9, where the value of supply is inclusive of taxes. Where the value of supply is inclusive of integrated tax, or as the case may be, central tax, state tax or the union territory tax, the tax amount shall be determined in the following manner. Tax amount will be equal to value inclusive of taxes into rate of CGST, SGST, IGST or UTGST divided by 100 plus rate as applicable in percentage terms. Now there is one more rule, Rule 5, which is the residual method. It says where the value of supply is not determinable under Rule 1, 2 or 4, the same shall be determined on reasonable basis and consistent with the principles of section 15 and the rules, provided that in the case of supply of services, the supplier may opt for this rule disregarding Rule 4. So this finishes with all the provisions relating to valuation in GST. Hope you all found the content useful. You can also subscribe to my YouTube channel CA Kamakshi Khandelwal for more videos in GST. Thank you. Have a nice day.